Hey everyone, welcome to my channel. I'm Doris. I'm here to show us about my stock account and today's market update. Today, let's continue to talk about the Japanese economy. Recently, it has been a focus of mine because of the fluctuations in the stock market, and today, let's talk about why the Japanese stock market has been changed and the current investors' outlook for the Japanese economy in the future. As we all know that ever since the 90s, Japan has suffered from high deflation, and its central government has been continuing on a policy of easing monetary policy in order to push for some inflation. Recently, Japan have declared to end its negative interest rate policy that has been pushing for short-term investment. However, the higher interest rates could also mean that higher corporate financing costs and higher consumer costs, which may lead to a stronger yen and helps with curbing exports that has been performing very negatively recent years. So BOJ cannot be too cautious about adjusting. In other words, the BOJ must be very cautious about adjusting negative interest rates. In addition to continue to maintain the 10-year bond yield target at around 0, the Bank of Japan in the new year for the first time, the monetary policy meeting made that the short-term interest rate target will be 0.1%, which will end in April's negative interest rate and depends on whether the price actually will increase to 2% of the target. Tracking prices in Japan has shown that Japanese core CPI has only briefly surpassed 3% in 2014 over the past 40 years, before falling and rapidly and failing. However, this pattern, which has long been entangled and tortured by deflation, has been slowly deconstructed and gradually accelerating since April 2022. The latest data released by Japanese Ministry of General Defense, showing that the average core CPI after excluding fresh food in 2023 is a 41-year high. In December, Japan's core CPI rose for 28 consecutive months, year-on-year, exceeding the BOJ's 2% inflation target control for the 21 consecutive months. Just as the Bank of Japan had to introduce negative interest rates based on the stubborn deflation price environment, whether the inflation shows stable stickiness or sustainability today is undoubtedly the most important indicator on whether the BOJ will consider withdrawing the negative interest rate policy. According to the latest outlook of the BOJ, Japan's core CPI in 2024 was 2.4%, down 0.4 percentage points, and the Economic Review report indicates that Japan's CPI will remain at 2% in 2024, and deflation remains above the BOJ's policy target for at least the next year. However, from forecasts that we can also tell, Japan's 2024 core CPI is apparently weaker than a year before, so the Japan's Bank of Japan is worried about importing prices, especially the upstream energy products prices lowered again by the increase of the difficulty of global economic recovery. At the same time, the yen continued weaken last year. CPI played a big role, and this year the Fed to raise interest rates is likely to drive the yen upward, so as to produce upward pressure on prices. Another important indicator is that Japan's supply and demand gap continue to be negative next year, on the basis of 10 consecutive quarters of negative growth. The gap between supply and demand is an indicator of difference between the level of demand and supply of Japanese economy. the Cabinet Office and the Bank of Japan respectively calculated different indicators. While the gap is positive, indicating that the excess demand is easy to lead to inflation. However, when the value is negative, which indicates that when there is excess supply, that can lead to deflation. This trend, if not reversed, will continue to lower the CPI. This is all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.